Hello, everybody. Welcome to our fifth episode of the interview series with Mickey Fulp, the Mercenary Geologist. Hi, Mickey.
Hi, Kai. How are you?
And doing great. And we're joined again by Paul Harris as well, our staff writer here at Oreninc. And my name is Kai Hoffmann. I'm the CEO of Oreninc.
Hi, everybody.
Today we got a small agenda prepared of topics we want to talk about. And why don't we jump right in? Because we've been witnessing an interesting development in the markets, which is the gold price is advancing, but the gold stocks or the mining stocks haven't really kept pace. So I'd like to hand over to Paul and Mickey here and sort of have a discussion on that topic. Paul.
Yes, I mean, gold has been steadily sort of building so far throughout the year, and I guess in the sort of January and into February, gold stocks were sort of jumping up in line with that. But more recent advances in the gold price, the gold stocks don't seem to have been sort of keeping up with that. I mean, is it a case of the gold stocks are running out of steam, or were they in advance of the gold price curve, and now gold's just catching up to where they are? What do you think, Mickey?
Well, I'm going to look at it on a little bit shorter term basis, and I think that's a phenomena that's happened recently. So we had a dip in gold from February 24th when it hit a high, I think, of 1256, if memory serves. We had a dip through the PDAC, but it's been up almost every day. I think every day except one since March 14th. So that's 10 trading days over a 2-week period. And that is in conjunction with the Dow being down 11 days in a row. And then I go to my usual seasonal index of the venture exchange. And bear in mind, I'm looking at the venture exchange and not necessarily GDX or GDXJ, which are really more in tune with the large gold miners and small gold miners. And we see this usual drop-off and kind of market blahs after the PDAC, and so we're right in tune with that.
Yeah, I think our numbers here at Oreninc, they sort of prove that as well, that the market is losing a bit of steam here coming up to Easter. If we look at the number of total financings, it's dropped to a 9-week low here, which is, only 27 financings have been announced last week. And also looking at, the overall dollar raise, although we had a 2-week high just recently, it's been influenced by a major financing, and the JDL gold financing. So if we take that 63 million out of that equation, we're also way off on our numbers here as well. So that brings me also to another question. We were talking about earlier is is the financing market also losing steam, because we see a lot of sub $1 million financings? Have the major players, or let's say the better deals, have they fully financed for now, and are they now waiting for the summer to get going? Are we now seeing, let's say, the tier 3 or tier 4 deals during their financings because it's now their turn?
That point's well taken. And once again, I think that's somewhat seasonal, because we all, in the back of our minds, realize that most companies try to finance in the first quarter so they can roll out their news at PDAC. So perhaps it's just a seasonal phenomena. And your point about the smaller, for lack of a better term, let's call them the bottom feeders in junior resource space, now coming in with their usual $200,000, $300,000 financings. That fits into the story we're trying to weave here, I think.
Yeah, there's been quite a few of those over the last week or two. The sub $1 million, just keep the wheels on financings.
Yeah. I've actually, I don't pay that much attention to that part of the market, because a lot of those companies have problems outside of the ability to raise money, i.e. they have very low share prices and suffer significant dilution. But I have been invited into 2 or 3 of those deals over the last week. One of which I'll probably participate in because it gives me an ability to average down on a stock that is gone through some difficulties, but has a future ahead of it, if you will.
Is it one of those financings where we actually see dilution of like 80%?
No, this is one of those $200,000-$300,000 deals at a nickel, and the stock's trading at a nickel. So with a warrant attached, say at 8 cents. So basically, it gives me an ability to average down on a company that's been around for now something on the order of 5 years, first as a private company, then as a public company, and it's still only got, say, 30 million shares outstanding. So there's a prayer for it with a good property, potentially good property.
That sounds like a good lotto ticket.
Yeah, it's basically what it. So.
One other thing we wanted to talk about, and I wanted to hand over the mic here to you guys, more or less, and going the other direction. We wanted to talk about the Oreninc Index.
I think that's we've been discussing doing this for a few weeks now, and we think it'd be a good idea to sort of find out a bit more about the index, how it's compiled, what it means. We sort of track the financings. We look at where money's going, what it's doing. But Kai, can you explain or help the listeners to understand a bit more about the index, how it's compiled, what's included in the index?
Yeah, for sure. No, for the last, 6 years, a little over 6 years, Oreninc's been compiling all the financings in the junior space. And from the get-go, before I was even involved, and they put together the Ionic Index, which sort of tracks all the financings and the overall health of the market. And what that means is, back in January 2011, they set a benchmark date in terms of the index, which means that we've been tracking all the financings and benchmarking against that. And as we all know, 2011 has been a really hot market. So coming back now, it's 2017, March 28th, 2017, we got something, a hot market to benchmark against and see where we're going. And how we compile that, we actually have like 3 categories we're looking at, and they're sort of weighted. One is the number of financings in a given week. Another important point for us is the broker participation. How active are the brokers in the market, and how much capital are they contributing? And also the total dollar raised in a given week. Our little secret is how do we weigh it? How do we put that together? Of course, we clean out the data a little bit as well. We don't have any oil and gas deals in there or deals that are too big that would sort of blow out the index out of proportion. We still see in our index, so if you look at this week's index, for example, or actually the last couple weeks, we've seen a couple major impacts there. For example, the JDL gold financing has had a massive positive impact on our index because of the size of like $63 million. So overall, it's like what we provide as well as a 5-week moving average, so we can see how the market is doing over a certain period of time, and whether it's trending upwards or downwards. Because sometimes just a massive financing might blow out the index out of proportion, although we do a good job, I think, of cleaning it up. But there's still that gap in there.
When you strip out a really big financing, is that a financing above a certain amount, or is that simply the biggest financing of the given week? No,
it's above a certain amount. Again, let's call it a company secret here, or a trade secret, what we filter out. But we do that to average out the index a little bit as well. Otherwise, it doesn't make any sense to compile this.
So we know that it's bigger than $63 million.
I think that, it's bigger than $63 million because we got the Petro Shale financing in there this week, which is $70 million, which has been led by Haywood. But no, it's. We got to be realistic. I think we also don't keep track of financings of companies that are above $1.5 billion in market cap. So, if Barrick does $1 billion financing, that would completely let's destroy our index. It wouldn't make any sense of putting that together. We're mostly focused on the junior space.
So this index includes the Toronto Stock Exchange and the Toronto Venture Exchange. Is that correct?
And the CSE.
Okay. So all Canadian mine exploration and mining markets, essentially.
And it's a really good benchmark to really see, especially the 5-week moving average. It's been upticking ever since, and you can see a certain seasonality in the index as well if you look at it. For the heck of it, we put a 5-year index together just for the Vancouver show, and you should be able to see that in our presentation from back in January, how the index was doing over the last, 6 years actually.
So I presume that it was normalized in January of 2011 at 100. Is that correct?
Yeah, exactly. So I think it was January 11th, 2011, if I'm not mistaken.
Okay.
So one of the better times in the markets.
Well, and so I would make the point that was the frothy top of the last bear market cycle, because and it continued through up to the first day of PDAC in 2011, which was March the 4th. On March the 4th, and bear in mind I'm pulling this out of the memory banks, but I'm pretty sure it's right or close to right. The Toronto Venture Index hit 2440 on that particular day, and it's been straight downhill since then, for the most part, till it bottomed in December at 474, if memory serves. So that would lead to my question. Now, bear in mind, I'm looking at the Venture Exchange and not really at the big board. Have you seen it reach 100 since that time in, say, the first quarter of 2011?
Yeah, we almost reached 100 actually with our 5-week moving average. Just mid-February? Just looking at the chart here. On a weekly basis, if you don't look at the 5-week moving average, we actually tipped, above that once this year actually. In February 9th, the week of February 9th was very successful. We were at 115 roughly, and also in January in May or spring last year, late spring last year, we peaked above that. But the moving average hasn't moved above that 100 level yet. So we peaked at it, but we didn't come across that. So that's why I'm still very confident, or still like our benchmark from back 2011, because it really shows us, or it gives us a goal or target to reach.
Well, that makes sense to me.
No, and to all our listeners, we're providing that information for free at Oreninc.com. Feel free to subscribe. We're sort of out of time here. I think we've covered a breadth of information, or a breadth of sectors, areas here on our episode this week. Subscribe. I'd like to thank Mickey again for participating, and Paul, of course, as well. Thank you for taking the time. Paul being based in Bogota, Mickey is in Arizona right now, or New Mexico, apologies.
New Mexico. Much better climate than Arizona.
While I'm here in Germany, so trying to coordinate a call and recording it every week every other week is much appreciated. Thanks for your time, guys, and we'll hear from you again in a couple of weeks. Thank you so much.
Thanks, my pleasure.
Bye-bye.